Hi everyone, I'm Edwin. Today I would like to talk about net working capital. First, company has different types of current assets like cash, inventory, and accounts receivable. They can convert to cash in a short time frame. On the other hand, companies also has to meet its short-term financial obligation like accounts payable, tax payable, and bank loan. So when we deduct current liabilities from current assets, we can then find out the net working capital. So let us take a look on the white soil case. From the table in the left-hand side, we can see that the current assets are mainly composed of inventory, accounts receivables, and bank deposits. It's actually a good distribution. Why? The reason is that when company encounters economic downturn, it's hard to turn inventory and account receivable in cash in a reasonable time frame. In addition, it will need to overstocking and increase in bad debt. Therefore, too much inventory and account receivable can impose risk to the company. And from the table in the right hand side, we can see that accounts payable contributes to 95% of current liabilities. It's actually a good sign as accounts payable is not interest bearing. So it implies that part of the current asset can be financed with interest free capital, leading to a lower operating cost. So at last, we can find the net working capital by deducting current liabilities from current assets. So when current assets is more than current liabilities, we will have a positive net working capital. What does it mean? It has two implications. First, it means that companies has no liquidity problem in paying back its short-term obligation. Second, as current assets is more than current liabilities, company has to put a portion of long-term capital in short-term assets. So that's why it called net working capital. So when there is an increase in net working capital, it means that in this year, the company has to invest more capital in current assets, which can lead to a decrease in free cash flow in this year. So on the other hand, when current asset is less than current liabilities, net working capital become negative. So on the blind side, company can spend less long-term capital in short-term asset, but on the other hand, it can be a sign of liquidity problem. So that's why company usually tries to maintain positive net working capital. So how to find the optimum level of net working capital? It's actually a good question, and it's actually a question that CFO has to figure out. So the concept has slightly different when it applies in personal finance. So for company, the interest cost on short-term loan is usually less than on long-term loan. In addition, the borrowing cost of corporate client is significantly lower than individual. So therefore, short-term loan can be a useful tool for debt financing for company. But how about for individuals? For individual, in contrast, unsecured personal loan, the interest rate is actually quite high. So it can range from 5% to 20%. And for an individual, it's quite hard to earn such a high return with a reasonable risk exposure in the long run. So therefore, for individuals, I would suggest you to first pay back your short-term loan. It's usually a good practice or a best investment for you. So even you don't have enough assets to pay back your short-term loan, you can still think about whether you can finance it by borrowing in long term, because some loan like credit cards and bank overdraft, they are quite short term. They charge the interest rate that is quite high. But if you, let's say, make an agreement with a bank to borrow for 4 to 5 years and then go through some application, usually you can borrow the money at a much lower cost, and then you use the low cost funding to finance the high cost short-term loan. It can actually improve your financial health. So let's conclude. So today we have talked about how to calculate the net working capital and what does net working capital tell us, and also show you how to apply the concept of net working capital and the current liabilities in personal finance. So overall, I hope you enjoy the video. If you like my video, please click like and then subscribe my video. I'm Edwin. Thanks for watching. See you next time. Bye.